Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. General Mills leave annual forecast on upbeat demand for at-home cooking. Reuters, General Mills Inc. raised its full-year forecast after beating quarterly profit estimates on Wednesday, as higher product prices didn't cool demand for the carriers, makers, snacks, and cereals. Packaged food makers have been steadily raising prices on everything from cereals to beef jerky as they look to insulate their margins from increased costs tied to labor, ingredients, and transportation without drawing consumer ire. With inflation nearing 40-year height, the consumer preference for cooking more at home, which developed during the pandemic, has been hard to shake off as shoppers try to stretch their dollars amid soaring energy and food prices. Significant inflation and reduced consumer spending power has led to an increase in at-home eating and other value-seeking behaviors, Chief Executive Officer Jeff Harmony said, attributing the demand for home cooking for the lower than expected impact of pricing on sales volume in the quarter. Third Bridge analyst Shogi Azaz notes General Mills NYSE GIS looks resilient against inflation pressures, adding the group's wide range of product and spectrum of price points should provide sufficient options for its customers to trade down, but not out of the General Mills range. The Lucky Charms owner said it expects consumers to become more price sensitive over the next 3 quarters. Shares of the Minnesota-based packaged food maker rose 3.7% as the positive results echo sentiments from some of its peers, including Kellogg NYSE, GM Smucker, and Kraft Heinz Nasdaq KHC CEO, which have also raised annual forecasts in recent months. The company now expects organic net sales to rise between 6% and 7% in fiscal 20 and 23. It had earlier forecast sales to grow 4% to 5%. The Betty Crocker cake mix maker also expects fiscal 20 and 23 adjusted profit per share to rise 2% to 5% on constant currency basis, compared with prior forecast range of flat to 3%. General Mills Coty Estee Lauder raised pre-market Stitch Fix falls. Investing.com stocks in focus in pre-market trade on Wednesday, September 21. Please refresh for updates. Stitch Fix Nasdaq SFIX stock fell 4.7% after the online personal staying service reported disappointing quarterly result and an underwhelming outlook, suggesting the weaker macroeconomic environment is holding back discretionary spending. Gap NYSE GPS stock fell 0.1% after the Wall Street Journal reported that the clothing retailer is set to cut 500 corporate jobs, seeking to reduce expenses amid declining sales. Estee Lauder NYSE EL stock rose 1.9% after Goldman Sachs upgraded its stage on the cosmetic company to buy from Natural, saying a path of further sales growth. Beyond Meat Nasdaq BYND stock fell 1.4% after the plant-based meat producer suspended its Doug Ramsey effective immediately following reports of executives' arrests for allegedly beating a man's nose during an altercation. Novartis NYSE NVS ADRs fell 0.8% after the Swiss drug maker announced it plans to petition the United States Supreme Court to uphold the validity of its patent for a dosing regimen of its blockbuster multiple sclerosis drug, Gilenya, and reversed a federal appeals court decision made earlier this summer. I think that's all from me. Don't forget to like, comment, share, and subscribe.